And so at this time, I want to turn it over to Jennings. He is the Executive Director of the U.S. Chamber of Commerce's Western Regional Office, responsible for legislative and political grassroots activities in 5 different states, including Hawaii. That's kind of a perk, Jennings. And they really support the organization's national public policy goals. So before joining the U.S. Chamber, Jennings worked in Washington, D.C. at the U.S. Association of Former Members of Congress at the public affairs firm of Mercury, Clark, and Weinstock. And prior to moving to D.C., he worked in the California State Assembly. He also managed and worked on several successful congressional and state legislative campaigns, mostly in the Southern California region. So Jennings, thank you so much for being with us today, and the floor is yours.
Great. Thanks, Danielle. Thanks for having me. Appreciate the introduction and appreciate certainly your friendship, partnership, the friendship of Adam, who I've known for many years now. We just really appreciate and value everything that you all do, not only to look out for your businesses and your members, but in kind of your advocacy on their behalf, really at all levels of government, and certainly on the federal side of things. You all made a really tremendous difference in first getting the CARES Act done, and then the various changes, as you all recall, probably to the CARES Act. We remember kind of how the PPP was rolled out, kind of clunky at first. It was an enormous undertaking, frankly, by the SBA, and there were some problems with it. And there were some aspects of it that didn't really work all that well for business, or maybe didn't provide the kind of flexibility that small businesses wanted. And quite frankly, it was chambers of commerce like the Greater Conejo Valley Chamber weighing in with members of Congress on those issues directly, and signing on to letters that we put out and things like that ultimately led us to get some changes and reforms to those programs and help make them work better for the business community. And we appreciate that, and certainly everything that you've done in advocating for C6s, chambers of commerce around the country, and making sure that they were included in this most recent round of relief. That just was a huge thing, and really it was great to see chambers from all across the country, including yours, stepping up to the plate and weighing in with members of Congress to get that important change, so that chambers are no longer left out of coronavirus assistance. So appreciate all that you do, appreciate the partnership, and I'm happy to kind of give an overview. I've got a couple of slides that I'll share on the recent relief package, and I'll do my best to cover most of the main points. There's a lot in there. I mean, it's a 6,000 page bill, so there's a lot to digest, and I'll do my best to answer any questions that you have. And if I can't answer all of the questions, which I anticipate maybe not being able to have all the answers, I'll do my best to track them down and make sure I get those over directly to Danielle and Adam so that they can distribute it to the entire group. So looking to the latest COVID package that passed at the end of the year, I think it's important to remember too, kind of how we got to this point. And this, once again, kind of aligns with the point that I just made about the tremendous advocacy work of the Greater Conejo Valley Chamber in pushing for another package to get done. It really kind of, I think it was perceived as necessary for much of the latter half of the year, as even though we saw a strong recovery in some sectors of the economy, certainly many sectors of the economy continued to struggle. And as we got into the late summer, early fall, as we saw the Paycheck Protection Program expire on August 8th, we saw the airlines program expire, in the early fall as well. I think it was September 30th. It just kind of underscored the need for additional rounds of assistance, and there were competing proposals that were put out there, by the House. The kind of numbers that were floated were anywhere between $2 and $3 trillion, massive packages. On the Senate side, very, very different. Looking more along the lines of $500 billion. So there was a huge gap between what Republicans in the Senate were pushing for, what Democrats in the House were pushing for, and then even, quite frankly, where the White House was. The White House was kind of all over the map at certain points on this. And it really required, I think it was a testament, quite frankly, to the activation of the business community and pushing members of Congress to come to the middle, to figure out a compromise, And we saw that really be effective in folks in the, for example, the Problem Solvers Caucus, which is a group of 25 Republicans, 25 Democrats in the House that came out with a bipartisan proposal. I believe it was in October of last year. That was about $1 billion or $1 trillion. That was kind of the midway point between what Republicans and Democrats had wanted. They were able to apply the necessary pressure to leadership, both Speaker Pelosi, Minority Leader McCarthy, and then on the Senate side, you had kind of a new kind of gang of 8 of 4 Republicans, 4 Democrats, and even an independent, Angus King from Maine, come together and push Majority Leader McConnell and Minority Leader Schumer to get to the negotiating table as well. And those 4 corners, McConnell, Schumer, Pelosi, McCarthy, the leaders of the Republican and Democrat caucuses in the House and Senate, relationship was not good between those 4 folks, but it really took members of Congress in the middle pushing them to get together. And those members of Congress in the middle received the courage, quite frankly, to do so by the business community, and the business community constantly weighing in and saying, this is a serious problem. We need additional relief. We see closures continuing. We see businesses continuing to struggle. PPP money is running out for folks. They need additional assistance. Unemployment is run out for folks. There's going to need to be more of a backstop. And that ultimately led us to the point where we got something done after the election, and we're able to get this final massive package signed into law on the Sunday following Christmas on December 27th, which is great. So thank you for all of that. That's kind of the recap of kind of how we got here congressionally. And of course, the economic case is obvious, I'm sure, to many of you as to why this was needed. I mentioned that we did see a pretty strong recovery from some sectors of the economy back in April, May, after that initial broad shutdown. Some sectors were able to rebound pretty nicely and get back to where they were before the pandemic, or even were able to do better than they were doing before the pandemic. But there were obviously some sectors where that wasn't the case, and they continued to struggle. And so that's why what we ended up seeing is being referred to as a K-shaped recovery. We all wanted to see a V-shaped recovery, where we had a very stark downturn followed immediately by a very sharp increase in economic activity, and we can get back to where we were in February of 2020. That happened for half the economy. The other half of the economy, it didn't. And I think we all kind of have an understanding of what sectors were hit hardest: food service, restaurant, travel, entertainment, hospitality, film, childcare providers. All of those folks really saw big hits. And I've got here the chart that indicates the employment drop off for some of these sectors. Obviously 30-40%, huge reductions in employment numbers. And we see that continue to be reflected in our stats today. In California, the unemployment rate is currently at 8.2%. We saw last week a tick up in the number of folks filing for unemployment insurance. It's now back to almost 1 million. So there are certainly kind of red flags that we're seeing across the economy, and that underscored the point of why Congress needed to do this. And then we also kind of further highlighting this, that we did a survey not too long ago, a couple weeks ago, that found that 51% of respondents, small businesses and mid-sized businesses, were worse off than pre-pandemic, and 41% were actually better off. So it really kind of shows the divergence that we've seen take place since March of 2020. Now, what's in the bill? Like I said, it's quite a large package, 6,000 pages. Of course, not all of it's COVID related. This was tacked on to the spending package as well at the end of the year. But obviously, there's a lot of changes here that were made, in particular as it pertains to small business. You have $284 billion for the Paycheck Protection Program. Some of that money was simply repurposed from the original PPP program, which expired on August 8th. I think there was something like $137 billion still left in that program. There's $15 billion in grants for live venues. So live venue operators, that's a new program that was just came out, just devised in this bill. As a matter of fact, I think that we're expecting to get more information on that program from the SBA later this afternoon. There's $20 billion dedicated for the economic injury disaster loan grants. It's that $10,000 grant under EIDL. And then unemployment support, of course, is included as well. In addition to the second round of checks for $600 per individual, the UI is extended through mid-March, and that's at a rate of $300 per week. A couple of other things that were included in the bill, which are kind of noteworthy. Housing support, it does extend the eviction moratorium through the end of January. It includes $82 billion as well, funding for reopening schools, which was a major priority of ours at the U.S. Chamber, in addition to all of the support for small businesses. There's a lot of money for continued vaccine distribution, for testing infrastructure, things like that. That should be helpful. Obviously, that's going to play a key role in getting the economy back on track. And then there's $45 billion as well for transportation. $15 billion of that 45 is dedicated for the airlines. So as I mentioned, that program that expired at the end of September, whereby we saw tens of thousands of airline employees get laid off. There's $15 billion in this bill specifically to bring those furloughed employees back on payroll. So for small business, that's really obviously what I'm going to focus on today, because I think that's the most relevant topic. Really just going to talk a little bit about the Paycheck Protection Program, some of the changes that were made to that, and then focus on some of the other things that are out there, the Employee Retention Tax Credit, the Economic Injury Disaster Loan Grant as well, and then the Live Venue Program. First with the PPP that was reopened upon enactment, and we saw really kind of the first interim guidance from the SBA was released last Friday, January 6th. The application was made live over the weekend as well, so you can access through the SBA's website or through Treasury's website the application for either first draw PPP or second draw PPP. You can take a look at that document there. The portals were open this Monday for CFIs, CDFIs. Those are community financial institutions, community development financial institutions that typically serve folks that are usually underserved and have a difficult time getting access to loans and credit, and typically operate in low-income communities. And there's specifically a certain amount of money set aside for those institutions as well. But for folks that use those institutions, they've been able to submit PPP applications now since Monday. The portal is going to open further to small lenders. So this is financial institutions with less than $1 billion in assets. That'll happen starting tomorrow. And then the portal will open for all lenders starting next week, Tuesday, January 19th. Some major changes took place with the PPP. First and foremost, since this is, of course, a chamber call, it's always good to mention the fact that 501c6, nonprofits, chambers of commerce, trade associations are included. Thankfully, finally, it was a long time coming. They can now get access to a PPP loan, so long as they have fewer than 300 employees and that they don't spend at least 15% of their time on lobbying or political activity. They also cannot receive at least 15% of the receipts from lobbying or political activity. Don't think that that's going to be a problem for most chambers. From what we've seen, only a handful of state chambers and metro chambers exceed that 15% threshold. So I think overall, that's good news for the chamber community. It does reopen the first draw PPP program, which closed at the beginning of August. So for businesses that didn't apply for PPP last year, they now can do so. A lot of the details of that program essentially remain unchanged from the first time around. The employee cap is the same at 500 employees. The loan amount, however, is different. So previously, there was a maximum loan amount for the PPP of $10 million per borrower. Now that's been reduced to $2 million. However, when calculating your loan amount, you would still essentially take your average monthly payroll and multiply that by 2.5 to determine the maximum loan that you can get, up to, of course, $2 million. There are some other changes as well to how you spend the money, which I'll talk about a little bit later, but that first draw PPP program is once again open, which is great news. Second draw PPP, this is a big change and a long time coming and something that the business community had fought very hard for. So now folks that received a PPP loan in 2020 can apply and receive a second draw loan starting this week or even next week for all lenders, which of course is really big news for folks that have continued to struggle. There are some changes in the second draw. Well, first and foremost, in order to be eligible for the second draw loan, you would have had to have already exhausted your entire PPP loan the first time around. Doesn't mean you needed to have already received forgiveness for that loan or be in process of applying for forgiveness, but you must have already spent the entire loan amount from the first PPP. The other eligibility changes were made to kind of make this program targeted specifically to small businesses that have sustained serious kind of economic damage over the course of the pandemic. So the employee count has been reduced from 500 employees to 300 employees. So this is going to be targeted to smaller businesses. And also there's when I mentioned need to prove that you've sustained economic damage, they're going to be looking at quarterly losses. So you're going to have to prove that you have seen at least a 25% reduction in gross receipts in any quarter of 2020 relative to the same quarter of 2019. And so those are some of the major kind of eligibility changes that were made for the second draw PPP. As it pertains to forgiveness of small business loans, of the PPP loans, that process is going to be simplified for loans that were under $150,000. We have yet to see exactly what that document is going to look like, but the SBA has, I believe, a couple more days, maybe a week or so, to turn that out. It's essentially going to be a one-page attestation for businesses that received less than $150,000 in a PPP loan. They'd have to fill out this attestation that they used the money the right way, they used it for payroll, they didn't make any kind of reductions, serious reductions in their staff, or more than a 25% reduction in salary, things like that. As long as they submit that to their lender, they should receive automatic forgiveness for those smaller loans. So as I mentioned, we look forward to seeing that documentation from SBA shortly. And when as it regards eligible expenses, this is also a big development that pertains to not only second draw PPP loans, but now first draw PPP loans as well. The list of eligible expenses has been expanded. However, I should note that the 60-40 rule still does apply here. So a lot of you probably recall that previously, in order to receive forgiveness, you had to have used 60% of your loan amount on payroll, and then 40% would need to be used on things like rent, interest on mortgage, utility. That 60-40 rule still applies. So in order to receive maximum loan forgiveness, you're still going to want to spend 60% of the loan, or make sure that 60% of the loan is being spent on payroll costs. But that second bucket of 40% has been expanded now to include other things like PPE. So think of plexiglass dividers, other sanitation equipment, ventilation systems, things like that, that obviously protect customers. That is going to be included in that 40% bucket. Other operational costs, so computing costs, cloud computing, payroll processing, supply costs as well. So any kind of contracts that you are in with suppliers prior to applying for the loan, those contracts now you can include in that 40% bucket. However, it's important to note that after receiving the loan, you can't use that money for contracts that you enter into afterwards. So those are some of the kind of examples of eligible expenses now that have been included in that 40% bucket. Hopefully that'll provide businesses with a little bit more flexibility in how they spend their money. But if they want to receive, of course, maximum forgiveness, keeping in mind that they're going to want to spend 60% of the loan amount on payroll. Another important change is what happened with the deductibility of expenses. That was a big issue that we had heard about at the U.S. Chamber for, quite frankly, for a little while, but especially the last couple of weeks and months, where businesses were starting to talk to their accountants and realizing that in preparation, of course, for tax season coming up, and realizing that they weren't going to be able to deduct their typical business expenses if they received a PPP loan and used that PPP loan for business expenses. Essentially, even though the loan itself wasn't taxable, this was a backdoor way of the IRS taxing your PPP loan. And that was certainly not the intent of Congress when they drafted the CARES Act. And this was finally fixed in this bill as well. So that deductibility of expenses will continue even if you use the PPP loan money for those expenses. And this is not only for new PPP loans as well as second draw PPP loans, but this is also going to be retroactive to folks that received a PPP loan back in 2020. They're no longer going to have to worry about not being able to deduct those normal business expenses. So that's really, really big news. And I think that avoids having a surprise tax bill next year, or later this year, which is great. Another change is to the EIDL grant program and how that's factored in when calculating your forgiveness amount. Previously, if a business had received a PPP loan as well as the EIDL advance grant, then they would have to deduct that EIDL grant amount from their PPP loan when applying for forgiveness. So, for example, if a business had received a $50,000 PPP loan and received a $5,000 EIDL grant, they would have to deduct $5,000. So they essentially would only be eligible for $45,000 in forgiveness and would be on the hook for the other $5,000. That's no longer going to be the case. And that is also retroactive to folks that received it last year, and even folks that had already gone through the forgiveness process and had to pay back that amount, whatever they received in the EIDL grant. It's also going to be retroactive for those folks. So those folks are going to want to contact their lenders to make sure that they can be made whole again. They're not going to need to have that count against them. Another really important program that was bolstered, quite frankly, in this bill is the Employee Retention Tax Credit. This was around in the CARES Act. It was certainly an option for folks to take advantage of, but unfortunately, very few businesses either knew that this existed or took advantage of it. Most businesses simply opted for the PPP loan. But the Employee Retention Tax Credit was a great opportunity for some folks last year and has been enhanced significantly in this latest bill. And I think really makes it attractive for businesses when they're looking to cover payroll costs and need some assistance in doing so. It increases the credit from 50% to 70% on essentially the $10,000 per employee. So it's what it was last year was at 50%. That essentially meant $5,000 per employee. That's what an employer could receive in tax credits. That has been boosted now to $7,000, but instead of being done on an annual basis like it was last year. So under the previous rules, you could only receive $5,000 per employee for an entire year. Now it's going to be done on a quarterly basis for the first 2 quarters of 2021, which means that an employer would be able to receive a $7,000 tax credit in Q1 and a $7,000 tax credit in Q2 for a single employee, so $14,000 per employee. And the eligibility threshold has also been changed to make this much easier for employers to take advantage of. So previously, in order to be eligible for this program, an employer had to show that they had experienced at least a 15% loss in revenue. That has now been changed to 20%. So I think that that's going to now open it up to more businesses to participate. And then the employee cap was also increased from 100 to 500. So previously, if you were an employer and you had more than 100 employees and you wanted to take advantage of this, you could do so, but you could only do so for employees that were not actually in the workplace, not actually providing a service. And so it was essentially really limited to small businesses with fewer than 100 employees. Well, the cap has been raised now. So if you have fewer than 500, you could use this for all of your employees. And if you have more than 500 employees, then the same rule would apply, that you could only use the employee retention tax credit to pay payroll costs for folks that you essentially are not having in the workplace providing an actual function or duty. What's also very interesting, and I think it's going to be very beneficial for businesses about this, is the fact that you can apply for the credit on a quarterly basis instead of having to wait until April 15th to do so. So you can receive the money quicker, and the credit can also be advanced. That was really kind of the intent of the program, was to make sure that they can kind of infuse capital into these businesses as quickly as possible, and that they wouldn't have to wait until tax season to take advantage of the tax credit, that they could simply do so when they do their normal remittances on a quarterly basis, which is great. And then another major change as well is the fact that businesses can now take advantage of both the PPP loan program and the employee retention tax credit. So you can apply for a PPP loan through your lender and apply to receive the employee retention tax credit, so long as you're not using that money for the same payroll costs. So two great benefits, I think, that that could benefit a number of businesses that need it. The Economic Injury Disaster Loan Grant Program is another popular program, very popular last year. That has been reopened as well as part of this bill. If you all recall, that's a $10,000 grant. It's the EIDL Advance Grant, up to $10,000. I think it was essentially done on an employee basis last year for the most part. So if you had 2 employees, or you'd get $2,000, 3 employees, $3,000, up to $10,000. That program has been reauthorized, although there are some changes to it. Priority this time around is going to be given to small businesses with fewer than 300 employees that are located in low income areas and who have experienced at least a 30% reduction in gross receipts in any 8-week period between March 1st of 2020 and the end of 2021. And that's really just to make sure that the program is targeted specifically at businesses that have sustained serious economic harm throughout the course of the pandemic. And when you're interested in finding out kind of what income areas qualify, there's a kind of an easy way that you could do this. If you just go to Google and you type in the search "new market tax credit maps," then you should be able to find that. This is based off of census information.
Hey, Jennings, real quick,
Yeah.
This is Adam. I just wanted to say that we've already done that research for Conejo Valley Chamber and identified 3 census tracts that are within the qualifying area. And they're pretty much all of the area north of the 101 freeway from the Oaks Mall down Thousand Oaks Boulevard toward the Auto Mall. So if your business is located in that area, because the residents of that area are low income, those areas are low income census tracts. And so we have a copy of that picture we can share with you all of the area that's covered, but there is a chunk of Thousand Oaks that qualifies. There are no census tracts in Westlake Village or Agora Hills that fit that requirement, just so everybody knows. Thanks.
Great. No, thanks for that, Adam. That's really helpful. And then let's see. Also, it's important to note too that for businesses that received an EIDL grant back in 2020, as I mentioned, it was kind of done on an employee basis. If you received 2,000, 3,000, whatever it happened to be back in 2020, and you still have a need for additional assistance and are interested in applying yet again for the grant, you can do so to kind of fill in the difference up to $10,000. So, don't be discouraged if you already received a grant last year. You can certainly do so again this year, and the portal is expected to be open hopefully next week. At least that's what we're hearing from the SBA. Their normal economic injury disaster loan program is open as of right now. You can go through the SBA's website to do that, but for the grant, we're expecting that to be open next week. And then lastly, the Shuttered Venue Grant Program, that's totally new in this package, was not part of the CARES Act in any way. This is open specifically to venue operators or promoters, theatrical producers, movie theaters, museums, talent representatives, even folks that essentially rely on live events for their business. Those folks largely would be eligible for the Shuttered Venue Grant Program. As I mentioned, we're still waiting on a little bit more information from the SBA on this. I know that they had a webinar this morning where they covered a lot of the details, but we're expecting to see more information later this afternoon from the SBA. What they're going to be looking at, though, for as far as we know, is kind of businesses that were fully operational on February 29th of 2020. They're going to be looking at businesses that have demonstrated at least a 25% drop in revenue in any quarter of 2020. Those businesses would be eligible. And then the maximum loan or grant amount that a business could receive is going to be capped at $10 million or 45% of the gross earned revenue back in 2019. And it's also to note as well that if you apply for the Shuttered Venue grant, that you are ineligible for PPP. So you cannot get a PPP loan and the Shuttered Venue grant. What's not in the bill, so that's a lot of stuff that is in the bill. The main two things that are not in the bill, and just kind of for you all to kind of keep an eye out for in early 2021, they're likely to come up in Congress. Liability protections, of course, for businesses and for schools, healthcare providers. We didn't see that. We were hoping to see that in this bill that did not make it in, unfortunately. That's going to continue to be part of the discussion in DC. And then, of course, state and local aid. That's been a major priority for Democrats. Incoming President Biden has stated that he wants to move on that quickly. Same thing for Pelosi and Schumer. So we'd expect that state and local aid will be included in the next COVID package whenever that eventually comes together. But those are kind of the two major components that we're missing in this bill. And then lastly, I just want to make sure that all of you are aware of our guides. I'm sure that the Greater Conejo Valley Chamber has kind of distributed these out via email over the course of this last year, because this is something that we put together back at the beginning of the pandemic, but we've since made updates, various updates, including an update to reflect the changes in this recent bill. So you can access our guide to loan forgiveness, how to navigate the PPP, as well as the guide for independent contractors that are accessing PPP, the EIDL grant program, the employee retention tax credit. All of that information is available on our website at uschamber.com/coronavirus or uschamber.com/SB loans. So with that, I think I covered most everything I wanted to. Hopefully I answered some of your questions, but I'm sure that we have a lot more questions in the queue. And then Adam, I don't know if you want to ask these questions that are lined up in the chat.
Yeah, I'm going to go through the chat here and do my best to get these questions to you, and we'll try to answer them. And then everybody, if you have a question, go ahead and drop it in the chat, and I'm going to try and go through them in chronological order here. First one is from Tom. He apparently, or I won't say him necessarily. The question is, if somebody applied for forgiveness for the PPE first draw, should they stop applying for forgiveness at this point and wait for this new one-page form to come out and then apply for forgiveness, or continue through the process?
That's a good question. I think it's really going to be up to them. I mean, the new form, like I said, we're hoping to see soon. I think under the statute, SBA has to produce that within 24 days of passage of the bill. So they're coming up against the clock to produce that. I think the easy form was relatively, easy to navigate. But if you'd like to wait for that one-page attestation, I think that's an option as well. I don't know if I'd be able to answer which one is better, but both are certainly going to be options.
Okay. Another question, and I think you covered this, but maybe just to reiterate, how people apply or take advantage of the employee retention tax credit.
So for the employee retention tax credit, this is something that you'd apply for or could apply for on a quarterly basis. And we advise businesses to consult with their accountants on exactly kind of how to go about doing this. But it is going to be done on a quarterly basis. You're not going to have to wait until April 15th, which is good news.
Hey, Jennings, can you speak a little bit to there's some nonprofits on the call in regards to the employee retention tax credit, because I believe it's different for nonprofits that they had to not be operating to be eligible for those funds?
I'd have to, that the nonprofit they couldn't be operational in order to get the retention tax credit. Is that right?
That's what I understood from Neil.
Okay,
presentation.
I'll have to double check on that
Okay.
and I can get back to you.
So our next question is actually about nonprofits. Real quickly, which programs of the ones discussed are nonprofits eligible to apply for? Is it just the PPE or is EIDL also included?
Yep, EIDL, PPP, the EIDL grant, as well as the live venue grant as well, if it's a nonprofit that's operating a venue. Yeah, they'd be eligible to apply for all of them. And the employee retention tax credit, I'll have to look into Danielle's question on that.
So one question we're getting, so this person runs their own business and they stop paying themselves in order to keep their business open. Is there any advice on what to use for their average payroll for determining their PPP eligibility or benefit?
Well, I mean, when you're determining your average payroll, you're going to be looking at so you have two options. So the good news is you can look at 2019 or the last 12 months. So if you stop paying yourself over the course of the pandemic, which is within the last 12 months, you may not want to use that as your metric. You may want to look instead at 2019 payroll. And you take that amount in 2019 and of course divide it by 12 to get your average monthly payroll cost. So that is an option.
Okay, quick question here about the Shuttered venue grant. You can't get both. If somebody applied for PPE and didn't get anything, can they now then apply for the Shuttered venue grant?
Yeah, I mean, if you, I don't see why not. If you applied for the PPP through your lender and weren't able to receive it, then that's fine. I mean, the law simply states that you cannot receive both the PPP loan and the grant. So I don't see a problem with that.
So, and forgive me, Adam talking, I don't recall if you talked about the 3.5 month factor with regard to restaurants and hotels.
Yeah.
If someone is a restaurant and they get the 3.5 factor for their second draw, can they go back and also get that for their first PPP loan?
No, so the 3.5 is only applicable for second draw PPP loans. So, but that is a good point though that I didn't mention is for restaurants, food service, hospitality. So essentially if you're a NAICS code 72 business, when calculating your loan amount for the second draw, you can take your average monthly payroll costs multiplied by 3.5 instead of 2.5. So it is a good point, but that's only for the second draw program.
So this question is about the employee retention tax credit. Is it retroactive to 2020?
So I don't believe so. So the changes to the employee retention tax credit, increasing that credit to $7,000 per quarter per employee, that's only for the first 2 quarters of 2021. The 2020 rules still apply of $5,000 per employee for the whole year.
Okay, this is a question about average monthly payroll for PPP eligibility. Does it have to be based on a calendar year, meaning January to December, or can it be any 12-month consecutive period?
So it's either 2019, as I mentioned a couple of questions before, either 2019 calendar year or the previous 12 months from the time you submit your application.
Okay, this question's about the EIDL grant, the $10,000 grant. When it first came out, it was determined to be $1,000 grant per employee. Is that still the case? I
believe so. I think that may be something that gets clarified by the SBA in the coming days or week or so. Just because that program is not open yet. We're expecting it, hoping that it will be open sometime next week, and we may find out more information then. So not 100%. I think we're probably going to have to take a wait and see approach to see if it's that same $1,000 per employee.
And again, on the EIDL loan, or rather, okay, so we talked about the grant. Are the loans also available again?
Yes, the loans are available again.
Okay.
So you can go directly to the SBA's website, sba.gov, and you can fill out an application for the loans. And the terms, I think, are essentially unchanged 30-year loan term, 3.75% interest rate, 2.75% for nonprofits.
Okay, I think that covers all the questions we had in the chat here. I'll just read one comment from our resident accountant, Rania Mashiro, who said that the state of California did not allow deductibility for PPP expenses. The federals did. So just so everybody knows, there's half and half there for us. Yay. If anyone has any other questions, please feel free to drop them in the chat. Otherwise, I think that kind of concludes our Q&A portion. We'll give it just one more minute. All right, I don't see anything else coming in, so thank you very much, Jennings. I'm going to toss it back to Danielle for some closing comments.
Thank you, Jennings. I have one question. Are you expecting from the U.S. Chamber that the EIDL grant program will reach beyond this first priority group once they cover that, since they are prioritizing the low income business areas?
That's a good question. I don't know. I'd have to ask probably around the building, and especially our small business team, our small business policy team, to see kind of what their sense is. But I mean, it's certainly not going to be closed off to other businesses, but the SBA has simply made it clear that that's going to be their priority. And we may find out more in the guidance that they release next week, kind of what exactly they have in mind for how to determine, who's going to maybe get first shot at it.
And are they prioritizing first draw for PPP, or is it two separate buckets, or is it just kind of a first come first serve scenario?
Yeah. So actually, that's a good question as well. So there is money that's been set aside in the PPP program as well. So on the lender side, there's money set aside for those community financial institutions, community development financial institutions. And then there's also been money set aside. I forget what the exact amount is, maybe $15 billion. I'd have to go and double check my notes. But there is money set aside as well for small businesses with fewer than 10 employees, as well as businesses that are looking to secure a loan under $250,000 that operate in low income areas. So there are set asides for those businesses. So essentially that they would get, I guess, priority and make sure the SBA's intent was to essentially make sure that those businesses are not left out.
Perfect. I appreciate that. Well, thank you so much for spending time with us. And I know everyone on the call, sometimes the questions come a little bit later than exactly on this webinar. So please feel free to be in touch with me or Adam. If we don't have the answer, we will certainly get in touch with Jennings and make sure we have the answer if it's available. As you heard, there are some things that are, already kind of paved out, and there are other things that we're still waiting on information on. So as we get those answers, we will certainly be pushing that out to our membership. But in the meantime, if you have questions, please make sure you're in touch. And Jennings, thanks for spending an hour of your time with us. We really appreciate it. And just looking forward to continuing this great partnership with the U.S. Chamber.